Hey, what's up everyone? Welcome into the channel. My name is Brett with Investing on the Go. Today we're covering our lump sum investment into TDAC to hit our new share goal. So if the market falls this week or falls next week, you'll know exactly why. It's because I did a lump sum investment. So in today's video, we're going to go ahead and cover how much I invested into TDAC, the amount of shares that I picked up, how my income going forward has increased by over $550 annually, and we'll go ahead and go over all these little details as well as jumping into our Robinhood portfolio right off the bat. I did have a question, so we'll answer a few questions and jump into anything else you guys may want to have asked in the future. So with that said, if you guys are brand new here to the channel, I would really appreciate it if you go down below, smash that subscribe, smash that thumbs up, really helps out the channel, the algorithm. If you guys have any comments or questions, drop them below, and check out the pinned comment to join the Discord server or get a free share here on Robinhood by getting started with the link down below. With that said, let's go ahead and jump into the platform. So answering a couple questions that I had was that I always go over the daily information, but on the week or on the month or the history that you've been on the Robinhood platform, how has your performance been since transferring over here? So really quickly, the time just flipped over to 12 a.m. So my daily reset here for Monday, it's now officially Tuesday, but we can see here on the 1 week here, since last week on the 5th, which was Tuesday last week, the portfolio has put on a 3.75% gain or close to $13,000. On the 1 month, we can see here, we put on a 9.23% gain or roughly $30,000. And since we've been here on the platform, we rolled over from Fidelity. Our portfolio was sitting right around $306,000. We've put on a 17.03% gain or close to $52,000 within that time frame. Now, this is just appreciation compounding within appreciation. That is why it's very important to hit your first $100,000, because that 10% appreciation on $100,000 is $10,000 versus you have $1,000 portfolio, that 10% is only $100. So it makes sense to just aim for that $100,000 by investing into growth, S&P 500, right? ETFs, something that's going to get you there. And then from that point on, it'll begin to compound within itself. And although I'm invested into covered call funds, we'll go ahead and take a look at the covered call funds that I'm invested in, why I chose these ones for their appreciation and their covered call dividends here in just a minute. So that's our portfolio as of now. We are sitting with some cash. This is going to, I have a plan for this. We're going to be covering that in a separate video, so we're not going to spend too much on that. But let's jump into taking a look at TDAC and why I chose to invest in TDAC over the NEOS funds or some of the other funds that are out there that have a much higher distribution percentage and all that stuff. So really quick, Tap Alpha, it's a Tap Alpha fund managers. This is an Innovation 100 Growth and Daily Income ETF. They like to target the exposure of the NASDAQ, and they do a really good job of this. They have a 0.68% expense ratio comparable to other ETFs similar to this one, such as the NEOS. This expense ratio, some would say, would be high. I would argue against that, saying I've been paying my property manager for the last going on 8 years, 10% of my rent per month. That's added up to tens of thousands of dollars that I paid them for managing my properties, versus this is a 0.6% expense ratio for having growth, 0-day covered calls. And the performance that I'm getting from this, if I pop over to some fundamentals here I have QQQ, the NASDAQ, here I have TDAC, and I have QQQI. We can see since inception of TDAC back in October, it has greatly outperformed or kept up with the underlying asset, and especially on the QQQI. Here at TDAC is up 25.44% with price and dividends reinvested. The NASDAQ's at 24.46% and QQQI is at 17.06%. If we take a look at just price alone, here, obviously with price alone, the covered call ETFs aren't going to keep up with the underlying asset because it's not paying out those distributions. But still, in comparing these two, why would I choose to invest into QQQI when it's doing half the performance on price versus that TDAC? So I'm still paying the exact same expense ratio. They're doing those 0-day covered calls. I'm getting a better product for this, for what I need it to do, right? So popping back over to my specific buy that I did today. So today I did a lump sum investment. I spent $3,733.38. I picked up 132 shares at a price of $28.28. This all triggered this morning on my way to the gym here at 9:46. I set up a limit buy for whatever reason at 28.32. It triggered at 28.28. So 9:46 right on through here. Take a look at the charts. 9:46 on the 11th was right on through here. So there's a little bit of a dip right on through here. I did a lump sum investment. I didn't really care whether I'm buying at the top or at the bottom. This is $3,000 of capital that's kind of moving into the account to hit my share goal. Going forward, this is going to be increasing my monthly income, increasing my yearly income. Any income, dividends that's paid out to me that's not used to pay down my expenses, we'll just buy back more shares for the next month and just continue to do this whole compounding effect and increasing my income going forward. So that's what we purchased. We picked up the TDAC position and how that affected our dividend portfolio. Let's pop over to that. So here, our TDAC position is now at 4,100 shares. If we scroll it down a bit, you can see our recent buy here on the 11th. We did have 3,968 shares. We picked up that 132 shares, bumping up our share count to 4,100. Our income on a monthly basis was from this holding alone, 1388. It jumped up to a whopping 1435. So on a monthly difference alone, that's a monthly increase of $46.20. But multiply that by 12, we just increased our yearly income going forward by $550. So it feels good to give yourself a $550 bonus, going forward. From this point on, going forward, I'm going to be making $554.40 of more dividend income with this holding alone. And any excess capital that I have remaining over will just continue to buy back more shares, increasing my next month income and my salary, my yearly salary as well. So it works out really well. Now, you might be saying the performance here, you're kind of slowing your performance down this way by investing into covered call funds, but I'm still getting the same total return or more total return by investing into these specific funds. And I'm using just a specific amount of capital to do this. I'm doing a mixture of my individual account and doing a mixture of my real estate business. I still do have an IRA and a Roth IRA that are working in the background that are untouched and no capital is being withdrawn out of them. And so I'm only using a small portion to do this style from. And if we take a look at almost a year ago, this is a video. I just had a comment on this video earlier today. This video is from 10 months ago. This was my prioritizing cash flow. So my strategy, I had my real estate business. It's bringing in $3,550 right now. I did reduce some expenses on my end by having the tenant cover water and a few other things. And then dividends, my monthly dividends back then was $2,800. That has now increased to $4,348. So $4,348. So that has increased. My other income here I showed at $950. My base other income right now is close to about $1,000. As this channel continues to grow, get more views, continues to get larger, it's going to also continue to increase that threshold as well with my other income. So I may bring in for my other close to 1,100 and continue to scale that up to 2,000, 3,000, and so on from this point on. I'd also like to get my Facebook and Instagram monetized as well. These are like little things that I'm working on in the background as well. And obviously anything that I don't spend on a monthly basis to pay down my expenses gets reinvested back into my portfolio to increase my base dividend portfolio moving forward, right? So if I'm able to save $1,000 next month and reinvest $1,000, I might not increase my monthly income by 46. I might only increase it by, say, $15. But hey, $15 or $20, if I'm able to continue to compound that on a monthly or so basis, it's just going to continue to grow this snowball larger and larger in order to fund our no 8 to 5 lifestyle, where me and my wife are able to go to the gym, wake up with the kiddos, make them breakfast, their lunch boxes, walk them to school, pick them up from school, go and do our activities with them after hours, after school, go into the park and such, and, do it all really, really nicely. So that is going to be it for this video. We did cover our recent purchases, why I'm choosing the Tap Alpha funds, T-SPY, well, not T-SPY, but TDAC, and our 10-month snapshot 10 months ago versus today's snapshot today as of the now 12th of May 2026. So that is going to be it for today's video. I do appreciate everyone tuning in and hanging out. It's definitely one of my shorter videos, but I like it short and concise, 11 minutes and 30 seconds. So that's it for me, guys. I do appreciate everyone for tuning in. Definitely go down below, smash that subscribe, smash that thumbs up, check out the pinned comment down below, and I'll catch you guys in the next one. Bye-bye.